Alrighty. Hello, everybody. Welcome to our crypto cow mining farm business. Um, Today is module 5 of our training. Can you believe it? We're on module 5 already. That means this is our 5th week into this training. I hope that you guys have learned a lot, and I believe some of you have already have your machines by now. I would like to hear who, if any of you have set it up or not yet. Please, if you have set it up, put it in the chat for me. Any questions you might have for me, we can go through that. Today, I want, what we're going to be focusing in on today is other ways that you can make money in cryptocurrency. And more specifically, trading. We'll be talking a lot about trading today, because when you're doing your mining, you have the options to either sell everything that you mined, you have the option to hold everything that you mined, or sell some of it to pay for your electricity and what have you, and then keep the rest, right? And so trading, even though that's like a different way to earn money, earn crypto, make a profit in crypto, it's extremely important for us miners to know when to sell, so that way we sell for the maximum amount of value, okay? Because if we're selling in a bear market, if we're selling when the market is bottom, well, that's not a very smart way to sell our coin, because then we'll lose a lot of value. So, for example, let's say if you were mining when Bitcoin was like 20,000, okay? Let's just use that as an example. And then you didn't sell it when it was 20,000. Instead, you didn't sell it until when Bitcoin was down at 6,000 or even 8,000. Then you sold it. Well, that means that you lost a ton of profit from that 20,000 on down. Okay. The cool thing about mining is, we're kind of making our own Bitcoin, right? We're creating our own crypto. We're creating our own crypto, and so it feels like we got the coin for free, and that we can sell at any time we want, and it doesn't matter, right? We're not like people who bought Bitcoin at 20,000 and then sold it at 6,000 or 8,000, right? We got it for free all along the way, and now we're selling it for 6,000 or 8,000. So a lot of miners don't think of it like that in terms of what they quote unquote bought that Bitcoin for, and what they would be selling it at. So I want to train you. I want to train you to think. I want to train you to think like that. That each day that you're mining Bitcoin, that whatever, or Litecoin, or whatever coin that you're mining, at the time when you earn that crypto, that is how much you bought that crypto for. Okay, bought quote unquote. Okay, when you mine it, there's a value. So, for example, if you had produced, if you mined some Bitcoin today, and let's say it's at 9,000 today, then that means that you basically bought that Bitcoin for 9,000. Okay, you didn't technically buy it, but its value at 9,000. So if it goes up to 10,000 tomorrow and you sell it tomorrow, that means you made a profit. But if it goes down to 8,000 the next day, and you sell at 8,000, that means you lost profit. Okay, so you gotta begin to think like that, so that way, technically that's not how it works, but we want to think like that so we can maximize our income. Okay. All right. So June said her shipment stuck at DHL. Um, they are asking for a DHL tracker number. Where on the order should I find that? Bitman, when they sent you an email to let you know that your package has been shipped, there should be the tracking number in that email. So go back and June, if you can go back and check your email from Bitman, okay? Okay. All right. So let's get right into it. Okay. So I created this acronym, and it happens to be my name, so that's really cool. But it's called the TIM, wealth formula, crypto wealth formula, and it's the top 3 ways that we make a profit in cryptocurrency. Okay. And they're not in any particular order. It's just the order that make it to where it spells my name. But T stands for trading. I stands for long-term hold. Investing that can, oftentimes means ICO. And M stands for mining. Okay, so trading, ICO, and mining. Okay. So we've been talking, in module 1 and 4, we've been talking a lot about mining. And I know that in the Bitcoin Mentor Club program, they talk a lot about ICOs and trading. We're not going to talk about ICOs in this training. However, we will talk about trading in this training, and the trading that we'll cover on this training is going to be different from what you might have seen or heard that's talked about in the Bitcoin Mentor Club. Because they do more of your sort of day trading versus the kind of trading that we're talking about today. It's more of a swing trading, and it's not really like trading. It's more of how do we know how to best manage the coins that we mined, so that way it maximize our mining profit. Meaning that if we mine 10 Bitcoins and we know when to sell it, and then when to buy more coins back in, so that way we can turn 10 Bitcoins into say 15 Bitcoins by adding the trading component to our mining, then that allows us to just drastically make more money, right? Than just mining on its own. Okay, so I want to make sure that you're clear on that. All right. So let's talk about trading. And like I said, it's for us, it's more of selling than it is trading. Sell high and buy back in low. Okay, so sell the coins that we mine high and buy back in low. So we want to sell when it's beginning of a bear market. So if we know that the market's starting to turn, we want to sell it, and we want to buy back in when it's low and it's beginning of a bull market. So that's what we're doing, and I want to share with you this tool that I use to do that. It's called TradingView. Okay, just so I can gauge, how many of you guys have started doing at least one trade already, just so I know. Okay, you might be familiar with this tool, TradingView. A lot of people, awesome, Doug. A lot of people, especially crypto, use TradingView to do our charts and stuff. And let me see here. I'm gonna try to. There we go. It doesn't block it. But I want to show you a very specific thing that I do with TradingView. So I'm going to give you an overview real quick of TradingView. Here you have your normal chart. In this case, I'm charting out Bitcoin versus US dollar, Bitcoin US dollar pair, using Coinbase exchange. And the reason why I'm using Coinbase is because most of my Bitcoin, Litecoin, Ethereum trade is done out of Coinbase. If I'm trading altcoins, and I'll use Binance, but sometimes I use Bittrex if that altcoin is not on Binance, it's on Bittrex. But Coinbase and Binance are my two main ones. Okay, when I say Coinbase, I should say GDAX. I don't actually buy or sell to Coinbase, the company, because their fees just too high. All right, so I'm selecting Bitcoin US dollars. Okay, I like to go Bitcoin to you. I like to always pair with US dollars as much as I can. And sometimes when you're doing altcoins, you can't pair with US dollars. You have to pair with US DT, right? So Tether, or you have to pair with Bitcoin or Ethereum. Okay, but whenever I can, I'll pair with US dollars. If I can't pair with US dollars, I'll pair with USDT. If I can't pair with USDT, I'll pair with Ethereum or Bitcoin, depending on what's available. Okay. All right. So where are we now? Let me see here. Okay, and when I'm looking at charts, I look at the daily chart. Okay, I look at the daily chart. Now, when I'm actually when I'm doing an actual trade, I'll go down to the 4-hour window to see where my entry, where would be a good entry for me to come in. But to chart the market, to see what the market's doing, I look at the daily chart. Okay. All right. So here's Bitcoin. Okay. And right now, this is a normal candle that you see. Okay, which is this candle right here. Okay. I know this might be basic, but I'm just gonna go through it real quick. But each candle here represent one time frame. In this case, because it's daily, each candle represent one day. Okay. Let me zoom this out. All right. Each candle represent one day, and you have if it's a green candle, that means it closed above it opened. So let's take this green for example. It opens right down here and it closed up here. Okay, and in between, it went all the way up here and went down here. Okay. A red candle means that it closed below it opened. So it opened right up here, right? And it closed down here. In between, you have what they call wicks, like a candle wick. So if you look at this one, right? This wick went all the way down here. So this is like a panic sell right here. That happened. Okay, and so that's a candle. In a little bit, we're gonna talk about another type of candle called Heiken Ashi, and we'll talk a little bit about that. An indicator, a couple indicators that I like to use is this high-low indicator that just tells me, what the high is, what the low is, high, low, like the dollar amount. Okay, so I can see here, the last market that went down was the lowest was 58.73 according to Coinbase. And then this last dip was 64.50. Okay, and then I like I don't do too much with this volume thing, except for I like to see it, to gauge where the market is. If there's not a lot of volume, it's very hard for a market to turn around. And then when you start to get more volume, then yeah, then you that's how you push a market, right? So if push a market an opposite way, okay? Because it takes more. So for example, let's take this one. See, all the volumes are low, 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 right? And then it took this big buy volume here that's bigger than these other sell volume to really push the market up, okay? Um, here you go, push the market up. You see that? Because otherwise, look at this sell volume. This sell volume is so high that it make the market trend down and down and down, okay? So that gives you an idea. And then the most important indicator that you're seeing on here that I want you to study a lot and get really good with this indicator is this one down here called TDI, okay, Traders Dynamic Index. To add indicators, you click on this indicator here, okay? If you search in TDI, the one that I like is this one right here, Trade with J, okay? And then there's another one that I also like is this one. This one says alert. This one allows me to set, like text alerts for them for TradingView to send me a text when, based on certain criteria. Okay. I'm sure I can send text alert here too, but I would have to do a little bit more programming versus the other ones already. The program's already done. Okay. All right. So either this TDI or this TDI, you can use either one of them. Doesn't matter. Okay. All right. So what I noticed, and I've studied a lot of different indicators. What I like about TDI is that it's a combination of several different indicators that are combined into one. You have RSI, you have moving averages, you have market sentiments, you have volatility. Okay, several into one that makes it why I like it. Okay, okay. All right. So the important one to look on here of how you can tell when it's a bear market versus when it's a bull market. Okay. Of course they are well, first of all, you probably already know bull market is an up market, right? The market's going up. That's a bull market. Bear market is the market going down. Okay. As you can see here, there are bull markets that are longer, okay, and then there are bear markets that are long, and then there's bull markets that are short, and then there's bear market that are short. Okay, so that's just how the market moves. Okay, every season's a little bit different, but here's how you can tell when it's a bear market versus when it's a bull market. Okay, you see here, so okay, let me explain this a little bit. So you have this green here, and different TDI might color code it a little bit differently. I'm just gonna explain this code based on this TDI. Okay, this green here represents your fast moving average. Okay, this red here represents your slow moving average. This orange represent your market sentiment, which is like the emotion of the market. Okay, how the market's feeling, whether they're feeling bull or whether they're feeling bear. Okay, and then this blue here, it's called your volatility. I don't really use blue much. The ones that I use that's most important to me is this red, like green, red, and orange. Okay, especially green and orange. Those two are the most important ones to me. All right. So this is from studying all the different indicators and trading, what I noticed that when you put your chart on daily and you watch this TDI, whenever, and I'm gonna go back here so that way you can see a visualization of this. So whenever green crosses orange going up, it's the beginning of a bull market. Okay. And then whenever green crosses orange going down, it's beginning of a bear market. Okay, so you have a bull market that runs from here to here, and a bear market that runs from here to here. Okay, so it's a small bear market. And then you have a bull market that runs from here, okay, over to here, a little bit of a bear market, and then a bull run again, and then a little bit of a bear market, and then a bull run again, okay, all the way up here, okay, and then beginning of a big bear market that runs from here all the way down over to here, okay, and then a bull market run here, and now a bear market. So right now, from here to here, we are sitting in a bull market right now. Okay, so this is bear, this is bull, 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 this is bear, and this is bull. We are in the bull market. However, notice that, see, this green is wanting to come down to the orange. We hope that it doesn't come down, okay? We hope that it stays up here. As you can see, sometimes it might look like it's going to come down, but then it makes a turn and goes back up. So that's what we're hoping for. But obviously, you know, this is not as strong of a bull market, you know, because it's trying to head down right here. But still, I mean, it's, you know, it's still a good bull market. All right. So first, I want to make sure before I go on, I want to make sure that you don't have any questions so far on how to tell when it's a bear market and when it's a bull market. Okay. All right. So whenever it's beginning of a bear market, you want to sell your coin and sit in US dollars, because US dollars doesn't fluctuate like crypto does. Okay. Now, I'll give you an example. Let's say if you had bought, let's say you start mining last year, okay, a year ago, which is back over here at 1,000 something, okay? If you had kept all of your coins and didn't buy and sell, just kept all of them, you would have went from let's see here if I can go back. May 1st or May 2nd, we were at about $1,400, okay? $1,500. So you would have went from $1,500 to what it is today, $9,200, okay? If all you did was held it. Now that's not a bad return, right? That's about what, a 600 something percent return, okay? Not a bad return. But if you had, if you had sold it whenever there's a bear market, okay, and buy back in when it's a bull market, beginning of a bull market, then what would happen is that you took profit and you use your profit to reinvest to buy more coins with. All right, let me use a bigger, more drastic example so you can see. Let's say you had sold it up here at, 18,000 something, okay? 19,000 something, almost 20,000. Let's say if you had sold it here at 20,000 for one Bitcoin, and you bought down here at 6,000, okay? Then for that one Bitcoin that you sold up here, you could have bought over 3 Bitcoins down here. You see how that works? Okay. So you wouldn't have lost all that profit like most people did. Okay. So by doing that each time, you're going to start to multiply your crypto very quickly, whether it's Bitcoin, Ethereum, Litecoin, doesn't matter. Okay. I'm just saying Bitcoin because, that's what we're using for our chart today, because it's the big dog. Okay. So by following this, okay. Now remember when I said green crosses orange going down, right? So we would have sold at 20,000, which is right here, right before it crossed going down, okay? And we would have sold it more over on this side after it already went down. Because if it's just like touching it, well, I don't know if it's going to bounce back or not, okay? So I'm going to wait for further confirmation. So we would have sold it right here at this candle here, which is roughly about 18,000 something, okay? Still good, right? So you would have sold here at 18,000, and you would have bought it back here, okay, after it crosses orange going up. You would have bought it back here at about 8,000 something, okay? So you wouldn't have sold at 20, and you wouldn't have bought in at 6,000, but you would have bought in at 8,000 something using this chart. I'm going to share with you how you can buy in at 6,000, but for now, just know that you would be buying in at 8,000 something. Okay? Is that easy enough? Okay. And then let's follow this. Okay. So you would have rolled this market up, and then you would have sold it right here when it went down at 9,000 something. Okay. And then you would have bought it back in again over here at 7,000 something. Okay. And now you're still holding out. Okay. So this is a really, I don't know why nobody teaches this, but this is a really good, smart strategy of, going in and out of the market, so that, so that you can, what is that? What's the term I'm looking for? So that you don't lose all your profit. Okay, so that way, as the market, goes up and down, you're able to take your profit. Now, they say that whenever you cash out, it's a taxable event. So if you cash out, if you sell into US dollars, it's a taxable event. Okay. However, if you sell it into USDT, which is Tether, which is still a cryptocurrency, then that's not considered as a taxable event. So if you're worrying about, having a taxable event or not, then don't sell it out to USD, sell it out to USDT instead. Okay. And so that way, you're still staying within crypto. If you're trading with a lot of money, I'm very reluctant to trade in USDT with a lot of money. I trust US dollar more. I don't trust Tether as much. But if you don't, what do I mean by a lot of money? Like hundreds of thousands of dollars. But if you, if you are okay with USDT and you're okay with the company, then USDT would be how you can trade in and out without having a taxable event. Okay. Okay. All right. So now I want to show you how you could have bought in low. Okay, whenever it goes low. Let me move this. Close this for now. All right. So I want you to notice this 30 right here. You notice these numbers right here, 30, 40, 50, 60, 70, blah, 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 okay? So this is how it works. Anytime it falls below 30, okay, they call it an oversold situation where too many people sold, okay? They oversold. And that's when, anytime it's below 30 is when it's the bottom of the market. Notice, okay, so if I let me do a line so that you can actually see. Let me see if it goes to 30. Try to be exact, but it's okay. All right. So this white line, okay? So that's 30. So anytime it reaches 30 or below, if you notice, it's the bottom of the market. Here's your bottom. Here's your other bottom, okay? Here's your bottom here, okay? So anytime it's below 30, it's a great time to buy, okay? All right. So that's how you are able to combine the strategy that I'm talking about here and be able to buy at the bottom, okay? So, you know, below 30 is the only time when I recommend to buy in a bear market, okay? There's no other time in between here in this bear market would I recommend to buy unless it's below 30, okay? And then up here, 70%, draw that line. All right. So when it's above 70, this is what they call an overbought market, okay? Above 70 is overbought, below 30 is oversold, okay? So whenever you're looking to buy above 70, it's very dangerous. It's a dangerous buy zone. Some people would actually use 80 and not 70. You know, it depends on your, if you want, try to make it perfect here, okay. Try to hit it right on the dot. It's a little tricky. All right. So, you know, above 70, you know, you're beginning to it's a, you know, it's an overbought situation. So you have to be very careful above 70. Definitely above 80, don't buy anything when it's above 80. Okay, when this number is above 80, don't ever buy up here because, you know, you're buying in a very dangerous zone. Okay, like when, you know, when the market was up here, right? You're like, so from that 10,000 to that 20,000, you wouldn't have bought a thing. Okay, that's a very scary zone to buy. Because as you notice, just like how here you have the bottom, okay, and after it hits the bottom, it comes back up. Up here you have the top. So once it hits the top, it's going to come down. Okay. If you go back to history, you see this history. You know, let's say we go back to here. Look, I went back to 2016. You know, kind of hard to see, but again, they all do the same thing. What happens after it hits the top? It goes down. Okay. There's no such thing as a market that keep on going up forever. Okay. So, you know, so be careful when you start buying above 70, and definitely do not buy anything uh, above 80. Okay. And if you know, if you are like like just I'm gonna draw the 80, the 90 line as well for you. If you're like stubborn and you're like, well, but I want to buy above 90, 80, then you can use 90 as your cutoff point. Okay, but that's quite dangerous. Dangerous. Okay, there you go. That's some line for you. All right. So in this case, you wouldn't have bought it. Let me see here. It went above 90 around this point, so 13,000 something. Okay. Um, all right. See, I wish I'd known all of these stuff before the last market crash. But sometimes life works that way, right? So, life has to teach you these lessons so that way you can pay attention and yeah, pay attention to be able to navigate through life. Okay. All right. So, okay. So now I want to show you another type of candle, and I'm going to split my screen up so I can do a comparison for you. Okay. Um, why is this showing up here? I don't know. Okay. All right. It's weird. I've never seen that. But anyways, okay. So this candle, so everything's the same, okay? Bitcoin, USDT, one-day chart, Coinbase. The only difference here is this candle called Heikinashi. Heikinashi. What I like about the Heikinashi candle is that whenever there's a bull market, you see this, whenever there's a bull trend, everything is green. Whenever there's a bear trend, everything is red. You see that? So it's similar to this candle, but the way it calculates, the candle is a little bit differently. And so it gives you this nice chart, okay? Nice chart. Now, if you compare, and this TDI is calculated based on these candles, okay? So, but you can see, I mean, it's very similar, okay? The only thing that's different is the way that this chart. All right. So I noticed that if you have a trend, okay, and let's say you have a bull trend right here, green trend, and then all of a sudden you have a red trend. If it's only one red trend, most likely, especially if it's a small red trend like what you see here, most likely it's going to continue to be green, okay? And then you see red, a small, and it'll continue to be green one, okay? However, I noticed that if they start to have two or more red trend, so if you have 1, 2 red, 3 reds, it's going to begin a red trend, okay? And then, here you have 2 green. I would wait until I see a third green before I declare that it's a trend. Now, it's not always like this, but as you can see, if you look here, here you have a small, bear trend, a small bull trend, and then you have a big bear trend down here, okay? And so what I do is I look I look at these, and then I also look at these and say, okay, if it's crossing, okay, especially like let's take over here, okay. So if you notice here, this begins a bull market, right? You see green here, and I see 3 greens in a row. And then I see, it starting to cross orange going up here. I know that that's enough confirmation for me that, it's the beginning of a bull market. Okay. Now, here you have 5 red candles right here. which would tell you that it's beginning of a bear market. But as you notice, because it's still above this orange, okay, I consider anything above this orange line as a bull market. So so until it has a lot, I would say, okay, it's just a small, it's just a small bear market, nothing to worry about yet, okay? Until it crosses the orange down, okay? And I also watch here, like if you see the candle is small like that, I am not as worried as when the red candle is big like that, okay? Whenever it's big, I'm more worried that there's gonna be a big drop. Versus when it's small like that, I'm not as worried, okay? So, let's talk about like right now. So this was yesterday. It's a small drop. Today it's we haven't closed out the day, so we don't know if it's going to be, green or red. But let's say today is closed red, but it's still small. So I'm not worried yet. Um, you know, uh, yeah, if this was a big red, then I would be more worried, and I would pay attention here whether or not I think that it's gonna close past this orange going down, and not be able to bounce back. Okay, let's look at one where there's a bounce somewhere. All right, let's okay. So let's zoom in here so you can see. All right, let's look at this one. This one has a bounce. Okay, so it's right here. It's a bull market, up, 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 and then you have three reds here. You're like, okay, is it a beginning of a bear market? But because it's so small, okay, I'm not as concerned about it, small relatively, right, compared to these. Um, so so I would watch it more to see whether or not how far below this market it's going to go. Versus over here, notice that these candles are bigger than these candles, okay? So whenever it's bigger than these green candles, I'm more concerned. But if it's red and it's small like my green candles or smaller, I'm not as concerned. So I know that when this is crossing, when this green crosses orange going down, and when this green crosses orange going down and it's showing red like this, I know, okay, it's gonna be a bear market. Let me get out. Okay. So that yeah, hope that helps. All right, let me check in with you. How are you doing so far? Chad. Does this apply to other coins besides BTC? The answer is yes, Gary. This will work on any coins that has enough volume. Can you give me a coin that you're thinking about? So, let's see. ZIL is a coin that's pretty popular right now. Let's take a look at that. Okay. All right. So this coin here, because it's so new, it only came out recently. Okay. There's not enough volume yet to have any indicator. You see that? Okay. So let's give one that does have some volume, maybe not too much. Let me think of one that. Okay, let's Bitcoin Cash doesn't have a lot of volume, so let's try that. Okay. All right. Because Bitcoin Cash only started back in August, right? So you can see here, the data didn't start until like February. So so whenever there's not enough data, then this doesn't work. But the minute that you start to see this orange start to form, so here you don't see the orange, okay? You don't know the market sentiment yet. But the minute you start to see the orange, the market sentiment start to happen on a daily chart, then that's how you know that this can work. Okay. Um, what's my criteria for volume? Good volume. I don't have a criteria for good volume. Um, you talking about this trading volume, or you talking about the overall trading volume? Oh, I look at volume only to compare if the strength of of today's trade is stronger than. So for example, okay, this is bear, right? So you can see the volume, the selling volume is high. And then you see this buying volume, it's not that strong, then it's a little bit stronger than this volume, but not as strong as this. Then I'm not confident that the market has turned yet. Okay, but if we go over here where this buy volume is pretty high, right, higher than most of these sell volumes, then I'm more confident that the market has turned. So that's how I look at the overall, like the trading volume. Okay, and you see, look at this buy volume. It's way up here, so I'm not worried. So like here, for example, you have this sell volume here, but it's still relative low compared to these guys, and even compared to like today. So I'm not worried about this market turning just yet. Okay. Um, okay. All right. Let me go back here. For newer coins, you tend to stay away until there's some history. Yes, I like for them to have at least 3 months of history. Okay, at least 3 months of history. Now, I I think that anything that doesn't have history, you, well, okay. Let me explain. If I'm trading, not ICOs, because ICO doesn't have history, and even ICO that first got into the market doesn't have much history. Okay, if you know if ICO if I'm not doing ICOs, if I'm not following an ICO, then I don't like to trade until I have at least 3 months of volume. Okay? Um, if I'm doing an if I'm buying in an ICO and they got in the market, let's say I didn't buy it at the pre-ICO, I bought it, I didn't buy it I didn't buy it until it hit the exchange, then that's a different strategy that's that which is different from what we're talking about here. Okay, we can talk about that on another call or another day. But when yeah, I guess when we teach about ICOs, we could talk about that. But for the purpose of trading, you don't really have good technical analysis data to trade with unless it's at least three months worth of data. Okay. June asks, Tim, what kind of trade would you set to make money when the market crosses the yellow line? The BMC model is to make money no matter how the market's turning. Can you give an example of how to capitalize on this bear market? All right, great. So June, there's if we're strictly talking about selling Bitcoin or selling crypto or buy and sell on most of these exchanges like GDAX, Bittrex, Binance, then I'm not a day trader like most people are, like a lot of traders are, because that's not my main my main business within crypto is mining. So I don't do a lot of trading. So I'm more of your long-term swing trader. So I like to just trade when it's a bull market. I stay out of bear market. However, if I really wanted to make money in bear market, all I have to do is get on an exchange that allows me to short Bitcoin, like BitMEX as an example. I can do the exact same thing. So if I was in BitMEX, okay, let me go back over here on this side. So if I'm trading on exchanges like GDAX, Binance, where I'm not shorting Bitcoin, okay, then I trade when it's a bull market. But if I'm going to be shorting Bitcoin, then I can trade on BitMEX when it's a bear market. So I would do exact opposite. So whenever I'm out of the trade, let's say on GDAX, okay, I sell on GDAX, I would get on BitMEX, and I would put I guess you can call it it would be a short. I would get on BitMEX and I would do a short on Bitcoin, meaning that I'm betting that it's going to go down. So that's how you would do it. You would just do so whenever the market's up here, bull market, you're going to use normal exchanges like GDAX, like Binance, like Bittrex. And then whenever the market's down here, you're going to use exchanges that allows you to short the crypto, whether short Bitcoin, short Ethereum, whatever coin that they allow you to short, okay? You would do it down here, okay? You can, if you do high volume, you do a lot of trades, you can trade instead of waiting for green to cross orange like I do. You can do when green crosses red, okay? So every time green crosses red, you can do a trade. So, but you're going to be doing a whole lot more trades than I do. That would fall into day trading. So you have to be very careful. But for most people, unless your plan is to day trade, I recommend either day trade or you're gonna short when it's in the bear market. For most people, I just recommend them to stay out of the market when it's a bear market, okay, and only trade in bull market, right? The only time when I'm buying in a bear market is when I'm buying it under 30, this 30 right here, okay? That's the only time when I'm buying in a bear market. Let me put that chart, that line up. Okay. So by buying it down, cheap down here, when the market bounce, then I make money. Okay, cool. All right. Okay, let me go back here. Ooh, we went through a lot of. Okay, so we went through the exchanges already. So the exchange that allows you to short is called BitMEX. Okay. When we're in the US, you can't access BitMEX. You need to have a VPN. They block. They block the US from being able to sign up for an account. So when you try to sign up for an account, they won't let you. Okay, here. At this time, BitMEX cannot serve customers in your country. You can still create an account, but you will be unable to deposit. Okay, so you can do simulated trading. So, anyways, so you would have to use a VPN from another country to log into BitMEX. Cool. Ready? Let me see. Where am I? Back over here. So we talked about candlesticks already, talking about Heikin-Ashi, talk about traders trend line. So let's go over that real quick. so this is where here, where you draw your trend line. So let me go to a single view again. Okay. I like this, let me see, this ray, okay? But you you can also do, you know, horizontal ray trend line as well. Play around with this different, you know, tools. But here's the difference between this trend line versus this one, okay? This is trend line versus ray. So if I want to do, let's see if I want to draw this trend from here down here. For a trend to be valid, for a trend line to be valid, you want to have at least 3 touch points, okay? And you want to stay consistent, meaning if you're gonna start at the beginning of a wick, then make sure your touch point is gonna be at the beginning of a wick. Meaning, okay, you're not gonna use beginning of a wick here and then touching the beginning of a candle here, okay? You you know, so if it's gonna be a wick, it's gonna stay in the wick, okay? And anytime something else crosses that trend line already, that trend line is no longer valid, okay? So I like to always, you know, draw my trend on top of a wick or, you know, at the bottom of a wick, not on top of the candle, bottom of the candle, okay? But so I'll give you an example of, and notice this trend line, if I draw this, I have to end it, you know, I have to like stop and end, right? Versus this ray, the reason why I like it is because it does the, so you see that? It does that for me automatically, so I can see what I'm, you know, doing, okay? So if I'm drawing this trend line here, notice nothing touching between, but there's a few touches here. So it's okay. It's not the best trend line in the world. A more accurate trend line would probably be from here. Let me see. Okay. Kind of like that. But let me try the lower one. Try this one. Actually, yeah. I'm gonna stick to this one. Not the best trend line, but it will have to be. Okay, let's see. There we go. This allows us to see our trend lines better. So so because it only has 2 points, this point and this point, I'm still waiting for another point to really consider my trend line to be valid. Okay, unless I can create a different trend line from here. You know, so this can be a decent trend line. Okay, all right. So this is a better trend line. It doesn't have to be exact, but you know, try as much as possible to be exact. Let's see where the other trend line might be. What if I start here? Can I start here? I need something more. I want to get this trend line here. Oops, what's happening? I think. Hold on here. Okay, I got disconnected there. But we are back now. So let me know if you can hear me, see me like normal. All right. So let me draw. I'm trying to draw this bottom trend line here to see how strong of a trend line we can get. And this would be a good trend line right here. Okay. All right. So we have this big wedge forming, which is really great. All right. Whenever you have a trend that's like this long, the market respects this trend line right here. Okay. This is a good trend line. So this is going to be your resistance. Okay. It's much harder for the market to drop below this trend line. Okay. And yeah, so we're coming close here. If we can break above this trend line, you see this bear trend that's been going down. Okay, if we can break above that, that's good news for us. Okay, so if we can go to like 10,000, that's good news for us. And it will be very hard. It's possible, but very unlikely that we would drop below this trend line. This trend line has been going on since September. Okay, so it's a good trend line. I bet if I go back and draw this trend line again from here, let me see. Okay. See, this trend line has already been broken. All right. So it broke at this last. So that was a good trend line. Look at this. This trend line was from July. So it touches here, here, and here. This is quite a good trend line. And this last downturn dropped below this trend line. And so that was kind of dangerous, but I'm glad it bounced above it. Okay. So let me go back to this other trend line here. You can see. All right. So you have one resistance here, and then now you have this new floor, new resistance here. And so yeah. All right. So that's how you draw a trend line. Like I said, make sure you have 3 touch points. Okay, 1, 2, or 1. In this case, is like 1, 2, 3, 4. Right. In this case, is like 1, 2, 3 touch point. This one is 1, 2, 3 touch points here. Okay, so you want to have at least 3 touch points. You want to start at the beginning of the wick, either top or very bottom. Okay, if you're gonna use the candle instead of the wicks, then make sure you're consistent with that. So however you're drawing your trend, make sure you stay consistent. All right, so now I'm gonna have some homework for you. So your homework is that if you don't already have TradingView, please sign up for an account with that, and install the TDI, the Traders Dynamic Index. Okay, install the TDI, and play around with the candlesticks. Okay, play around with the TDI, play around with the trend line. Sounds good? All righty. All right, well, I hope you had enjoyed this training. I certainly enjoyed it. So I think as long as I'm having fun and enjoy it, we're all good, right? So I, I do expect you to do your homework, and I look forward to talking with you more on the next training next Wednesday. All right. Thanks, everybody. See you later, alligators. All right. You're supposed to say "see you soon, raccoon." All right. Bye bye. Thank you. See ya.